To escrow or to not escrow your property taxes and insurance? That is the question. Before we dive into today's topic, if you haven't already, please subscribe to the channel. I do appreciate you guys tuning in and supporting the channel. So by subscribing, you're going to be notified anytime we drop new information. Also, stick around to the end. I'm going to put a link to a playlist for all of our real estate and mortgage tips. Bunch of information there that can help you maximize your savings as it pertains to real estate and mortgages. Now, escrows, including your property taxes and insurance in your monthly payment. Should you or should you not? Now, a lot of people feel a lot of different ways and have different opinions on how this should be handled. And many people don't even realize that you have the option. A lot of people that, if you're a current homeowner, if you've had a few mortgages over the years, you might not even know that some loans offer you the choice to whether or not to include your property taxes and insurance in your payment. Well, I'm here to tell you that most of our loans, as long as it's not an FHA loan, if it's a conventional VA, most loans will give you the ability to choose whether or not to include your property taxes and insurance in your monthly payment. And that can be a huge deal depending on how you want to manage your money, right? So first and foremost, every mortgage I've ever had over the course of the last 20 some odd years, I've always chosen to pay my property taxes and insurance on my own. I'm not a big fan of escrows. And the reason for that is because I like to have complete financial control over where my dollar goes, right? So when you have an escrow account, the idea behind it is simplicity. They say, okay, well, we're going to take this amount of money. This is how much your homeowner's insurance premium is every year. And this is what we estimate your property taxes will be this year. We're going to take that number. We're usually going to pad it by 2 to 3 months. And then we're going to essentially collect the 3 months in advance and then add the difference to your monthly payment. Divide that over the 12 months of the year. Sounds great. In a perfect world, that would go perfectly, but we all know things don't always work out that way. So I like to have that complete financial control and know exactly how much I'm going to need to pay at the beginning or end of each year. Generally speaking, depending on when you get that homeowner's insurance premium set up, that obviously would be due every year at that time. Your property taxes are generally going to be due at the end of each year or, first couple weeks of January. By having that complete financial control, it can not only lower your bottom line when it comes to cash to close when purchasing or refinancing a home, because obviously we do not have to collect the property taxes and insurance. You'd be responsible for that on your own. But it also gives you the ability to redirect those funds elsewhere and give you investment opportunities. Now, to be clear, you are simply taking on that responsibility on your own to pay your property taxes and insurance if you choose to not escrow. So I don't want you to think, well, that magically disappears. You're still responsible for making that payment every year directly to the proper, billing authority, whether it be your insurance company or the property taxing authority. But waiving those escrows, you can take that money for the year and maybe instead of giving it to the lender to put in your escrow account, now you can redirect it to a short-term CD, a certificate of deposit that maybe can earn you a couple points in interest. Now, is that going to make you rich? No, probably not. But you're at least getting something and every dollar counts, right? So it also gives you the ability to avoid any errors. Now, remember, your escrows are going to be based off of projections at a snapshot in time. And as we know, as time progresses, hopefully the property value is going up, which means your insurance premium might go up. Your property taxes might go up, which also means that they could have either under or overestimated the amount that they were collecting, right? So that can cause your payment to fluctuate if you chose to escrow. Another great benefit in choosing to not escrow your property taxes and insurance is if you set up a mortgage without escrows, you can always later on down the line choose to set up an escrow account. So let's say you're on the fence. All these things sound great. I'd like to have control over my money, But, let's say you give it a shot for a year or two and you say, this isn't for me, I would rather it be included in the payment. You can always do that. You can set up a mortgage without escrow and then later on down the line set up escrow. However, if you set up a mortgage with an escrow account, that cannot be undone until you pay off that mortgage. So I personally love the option of having options. Hope this helps. If you have any questions that are either real estate or mortgage related, I'm always a message, comment, or phone call away. All the information's below. I hope everybody has a great day.